Hello. In this video, I'm going to take a look at the last year or so of the market and talk about where I think it is going to go next. I'm not going to call this a prediction or a forecast because they never work out well. But I do believe that the chart does give us some very good and clear guidance on where the market is going to go and what to expect out of it. This last year has been a major roller coaster and one wicked bear trend. Since roughly November 21st, actually I should say November 14th of 2021, we have been in a very deep bearish market, and it has simply not let up. We had a brief reprieve that looked like a market correction, but then it just turned downwards even more and has gone completely in that direction ever since. So where does that put us now? Right here today, it looks like the market is pretty flat. And if you've been watching a few of my shorts on YouTube, the order books themselves look pretty flat. Whether or not we're at a plateau for a turnaround is really the question I think we need to focus on, because I truly don't believe so. I'm hoping really we stay sideways for at least 3 months. And then hopefully by mid-late February, when the normal bullish summer cycle starts, we will begin to enter a bullish market. But in all honesty, I have my doubts. I don't even know if we're going to see the traditional bullish sentiment come mid-February to mid-March that you normally would in a market structure. While I've talked about the market needing a correction on many cases, I don't think anybody could ever anticipate the level of correction that the market has undergone. Also, I think we need to talk about the fact of the FTX collapse and a money laundering scandal that has erupted from it, where politicians have pocketed hundreds of millions of dollars. There's going to be consequences for this collapse, both long-term and short-term. And I don't expect politicians to give back their ill-gotten gains. If anything, they will simply just funnel it through their own charities back into their pockets, making it look like they've done something good, when in fact they've done what they've always done: lied to the public. It's come out over recent weeks just how much money has been laundered and just how corrupt politicians are around the world that have taken this money to turn a blind eye. So it goes pretty clear what we can expect. While there is going to probably be more legislation and jurisdictional heavy-handedness on the market, it won't be in favor of the retail investor. Rest assured, the money that was stolen was from mostly retail investors, and they will yet be robbed again through the heavy-handedness of more legislation. But that goes without saying in today's world of politicians who think they are above the law. And when you have corrupt governments from beginning to end, there is no end in sight to that corruption. That is just one part of this puzzle. How much that part plays is questionable because there are some good exchanges in the world that aren't or haven't shown exposure to the corruption that has existed from the FTX collapse. But it has shaken investor confidence to the point that exchanges are scrambling to prove that they are stable and solid through Merkle tree proofs. How well this will work in the long run is questionable because mathematics is just that, mathematics. There's always going to be some way to cook the books or lie about the equation underneath, just as SBF did with FTX and the very leveraging rules that every user had to follow, but that Alameda was magically exempted from. So when you think about the interest that he earned on all of the money he had in accounts, the fact that he had unlimited leverage to make money when everybody else was losing money, the fact that he had access to the order books and could leverage easily 10 times the amount of any order in the book to tilt the scales in his favor, it becomes clear just how much investor sentiment was shaken. It's going to take a long time for confidence in exchanges to be rebuilt, and exchanges are going to really have to work overtime to rebuild that. While some exchanges have definitely stepped up and proven that fact, some haven't. And it's only adding to the speculation of the corruption within the market itself and bringing into question their own actions. Realistically, as we look at the market today, if we were to take our positions today and try to figure out where the market was going to be a day from now, a week from now, or a year from now, we can't really make that assessment without thinking about the risk of what happened to FTX or the risk of large amounts of money in the market. So I don't believe we're going to have a standard bull run when the traditional market structure says we should. I think the markets aren't going to recover for a very long time. And when they do, they will overcorrect just as they did starting November 14th. That is bad. Such sharp corrections are dangerous because it leads to the events that we just witnessed. We need normal corrections that operate in a cycle-based mechanical process where the price hovers around the midpoint here and there and occasionally pushes its boundaries, both upper and lower, to remain healthy in the long term. Right now we are pushing the lower boundaries of the market, and we can clearly see from the chart that the market has been very flat since mid-November this year, literally 1 year after this bearish trend started. That could be a good sign that we've reached a plateau and that the market is either going to remain relatively quiet for now, or that it may be a slight bullish uptick. But I don't expect it to be a major bullish uptick given the direction the market sentiment is playing out currently. So looking at this chart, we see that the 1 week forecasting trend is still climbing upward. Personally, I don't pay much attention to that at this point, but if it starts to turn downward, I think that is a sign that we really need to take into account and rethink our trading approaches completely from scratch. A 1 week downtrending market is really a bad sign. So we need to keep a close eye on that aspect. How long that will take, or if that will take effect, is anyone's guess at this point. I don't know that I can say that the 1 week forecast is really changing slope or direction. It looks like it might be slowing down, but it's hard to tell when you look at the market as a whole and in its own entirety since the beginning of the market cycle, where it started to be plotted. At this point, having it continue in an upward cycle is at least a show of confidence that the market is slowly recovering. The elements, though, that I pay attention to is really the daily. The daily has been trending downward for a very long time. If we look on the chart, you can see that it really started turning downward mid-March or so, when this bearish market, in fact, just before this bearish market started to really take root again on its second cycle, if you can really say that. Because quite frankly, I see this as one complete cycle that really hasn't stopped yet. But mid-March seems to be where the daily took another downturn. So from that aspect of the market, we can see clearly that we are still going down more. I don't think we're going to see that turn around for a while. I suspect at least until late February, early March, we might start seeing the daily turn upwards. Right now, with the holiday season and money been taken out of the market starting around October 1st, I just don't see a lot of money in the market to suggest that the daily is going to turn around that quickly. Whereas the normal cycle of mid to late February, when the money is being put back in the market from paying off all the holiday bills, I think we might start seeing some relief from this bear cycle. The 4-hour and the 1-hour show that the market may be overtly questionable, and that it is really very level. Now, if you were to look at the candles themselves without the forecaster on it, you can see that the market does have volatility, but not as much as you would expect considering the current situation within the market. But when you look at the bigger picture of the market, and you really take into account what you expect out of the market, it's very clear to see that the market really isn't moving that much. That's good for a grid bot or any kind of a unbounded channeled system. Some of the more traditional approaches like MACD, Bollinger's, might struggle here just because there's not really that much volatility in the market at the moment. At least not for any significant jumps. If you're using small gains like a simple 1% approach through a basic accumulation process that is momentum driven, I think there's still plenty of short-term opportunities to take advantage of. But I don't really see the advantages of going in a high-risk element given what the market is doing. I don't see this correction ending yet. And I'm not sure it will end under the current market conditions. The forecasts of reliable economists still say that Bitcoin prices could drop a lot more. I don't know if that's true, but the market, looking at it at this point, certainly does seem to suggest so. If each boundary being 10%, you're looking at 10, 20, 30, 40, a 50% drop just from the mid-April peak. Now, if you go with the entire market at its all-time high, you're looking at close to an 80% drop. And that is really a significant portion of the amount of money that has been invested. So moving forward, I don't recommend any kind of aggressive accumulation unless you have the balance and budget to support it. Keeping the 100 maximum positions is really the best way. A grid bot is going to do well as some kind of a hedge. But if you're using an infinite grid, that could be problematic if the market does another sharp downturn, unless you are weathered and ready for that kind of situation. Overall, the market does have opportunity, and there are a lot of good chances of making real profit. How much is always going to be debatable and questionable, but nonetheless, it's clear to see that a good, solid market approach will work well. Accumulation will certainly work well with minimal risk as long as you expect a worst-case scenario in part of your planning. Cautious trading and responsible trading will always win the day. Accumulation is a wonderful process, but as I've said time and time again, you need to think about holding an asset for at least 1 year. And that certainly has been proven true over the last year with just Bitcoin alone, in terms of the amount of accumulation, recovery, and averaging necessary just to weather this particular bearish cycle. This cycle, I believe, will continue at least a minimum of 2 to 3 more months. Given the current economic situation, it's very possible that we could see this cycle continue for another year, easily. Be prepared for it. Don't overextend yourself. Don't over-leverage yourself. Think about your worst-case situations. Think about the worst-case amount of positions. Using an all-in 1% deviation for 100 positions will do well, but you're going to have a holding period, and that holding period will be quite a while. Don't underestimate how long this market is going to stay in a bearish state. No matter what the wannabes want to say with respect to the next bull cycle, don't listen. If we have a bull cycle, a properly set up strategy will maximize it anyway. If we don't have a bull cycle, having such a defensive strategy will simply weather what it has already been weathering for the last 9 months to a year. So stay cautious, stay careful. and think about the long term. You always hear about how 100 trades is the hallmark of any good strategy. That is simply just a goalpost to give you an idea of how well it will work. That is not the hallmark. Once you've made your first 100 trades, you need to think about the next 1,000 trades, the next 10,000 trades. A well-built strategy or recipe will easily weather any market condition, no matter how the market moves. Short-term aggressive strategies are going to be laid to waste very quickly and very easily. They are just that, short-term. When you develop your strategies, look at the market at the bigger picture. That daily line is absolutely critical in understanding where the market is going right now. And it is and it has been trending downwards. That means it will continue trending downwards because you're not going to have a market magically spike 10% within one day. And if it does, I would be terrified to have my money in that market because that's a clear sign of widespread market manipulation. While statistics is a double-edged sword, it's very clear that when you look at something like what we see on the screen right now, that those statistics, when used properly, can give you very good warnings of what's going to happen. While I do expect an upwards correction, I don't believe it's going to be a fast correction. And if it is a fast correction, there's going to be overcorrection in a negative way, just as we have previously seen over this last year. The Bitcoin market in general is not healthy, and it hasn't been healthy since its inception. It's been driven by greed. It's been driven by manipulation of people wanting it to go to sky-high prices while trying to push credit cards and monetary policy. I've talked about that before with monetary policy and commodity-based pricing and just how they can't coexist. We are seeing the impact in many ways of what happens when you try to do both at once. The market is in absolute chaos. Bitcoin has to decide, is it going to be a commodity or is it going to be a monetary concept or a monetary currency? It can't be both and weather these kinds of extreme fluctuations from a high of $67,000 down to a current price of $16,000. That's not something the market will tolerate as a whole, with buyers and consumers looking to put value and monetary weight in the asset. To say that Bitcoin market is one particular factor over another, I think is wrong. I think it's a combination of many factors. Some have more weight than others, but that combination plagues every market dominate, or every market that depends on Bitcoin. And I think Ethereum is not much better off, to be honest. And the markets are going to have their impact as well with respect to how they are proceeding. The proof of work versus proof of stake has certainly turned out to be anything and everything but what it was advertised to be. And those aspects, I think, are going to begin to show up as well. We have already seen several of them with the centralization of Ethereum. That is one thing that Bitcoin does have in its favor, is it is still extremely decentralized. But the reality being that decentralization needs to be really defended aggressively. And that will be Bitcoin's survival. In all honesty, if Bitcoin goes to proof of stake, it's done. In the story. Bottom line, it'll line, it ends. If Bitcoin becomes centralized, the way Ethereum has, with 87% of all Ethereum being controlled by 5 machines, then the Bitcoin market is going to zero with full liquidation. That's not to say that the current market can't go to zero, but if it moves to proof of stake, it will go to zero, because it undermines the very virtue of what Bitcoin is, the people's money, controlled by the people. Well, I've gone on enough about this. I think you get the picture in terms of what I think the market is going to do. Stay defensive. Stay cautious. Don't let yourself get greedy, and don't second guess any working trading strategies. This is a case of staying the course and simply waiting it out. Once you have a strategy that works in all markets, don't break it, because you'll never get it back, and that's the big problem with the markets. You can't repeat previous successes. Only take that information and hopefully build future successes based upon it. You never know how the market is going to go. So if you have something running that's doing well, leave it alone. Let it work. Don't overestimate yourself. Don't overextend yourself. Until next time,